Global equity markets were fairly mixed on Friday's trading at the close, with US markets actually declining, but European markets did actually see some lifts. What we have seen is a lot of focus on the US economy lately, and most of the focus on Friday was once again on what is happening in that part of the world. And what we did see is their latest labour force statistics, with more people being employed over the past month than most were expecting, even though the US unemployment rate does remain at 9.1%. But the sentiment is still pretty mixed in the market at the moment, and we have in fact seen the US dollar back in favour over the past couple of days, meaning that the New Zealand dollar has actually declined over the weekend, and once again, early on Monday morning, we're trading back under 77 cents against the US. One of the positives to come out of the US market right now is that US imported beef prices are holding on pretty well, and the market is actually looking pretty solid for some of their farmers. Looking at beef futures, which I have been following over the past couple of weeks, they are looking good, and they're actually increased over the past 6 weeks, just trading off the highs that were recorded earlier on this year. Now, the US market is looking pretty sound, but the real issue for processors right now is that they are making negative margins. They're being forced to pay higher prices from the farmers because they aren't really getting a lot of supply through the door, and at the same time they really can't pass this on to the end consumer because demand is still relatively soft. So this is meaning some good things for imported beef prices, and should be pretty good things for New Zealand farmers as well. With the New Zealand dollar dropping just a little bit over the past couple of weeks and having the potential to stay a little bit lower over the next few weeks, this is going to provide a nice little buffer for farmers to see some pretty solid prices.